If you're watching this video, I'm just going to go out on a limb here and say that you're tired of all of this psychology, risk management bullshit, okay? All you want is a tested and proven trading system that will actually make you profits. This is the same system that a brand new trader used inside of my group to make 18R in the past 2 weeks. So let's say you're risking 2% of your account per trade, times that by 18, that's 36% of your account with good risk management in his first 2 weeks. He was brand new to the strategy, had never learned this before. Due to the strategy's simplicity and mechanical nature, he was able to go from an unprofitable trader for literally years on end to now a profitable trader using the system. So sit back, relax, make sure to watch this video until the end. It may just change your trading forever. Without further ado, let's jump into it. So this system works across any asset, of course, on any time frame. Price is all fractal, but I find that this is a really good entry model. So, a lot of you guys, you can identify a good setup, but you just have trouble entering on a lower time frame, right? Pinpointing that entry, you don't really know what to look for. You're getting overwhelmed with all these different indicators, X, Y, Z. So this strategy will simplify that a ton for you guys. Now, I have named this model the manipulation model. And the reason I call it the manipulation model is because you are literally entering a trade right after manipulation happens. So for example here, right, I can see we saw a sweep of this low here to the left. This is going to be our manipulation, right? Let me mark this out here as manipulation, right? Manipulation, and then we would actually enter the trade right here. Okay, as soon as we close back above that low, inverse that bearish fair value gap, you would enter the trade. So this is a 3-step entry model, okay? A 3-step entry model, and I'm gonna type it out just to make it a little bit more clear for you guys, okay? So 3 steps, I'll call it manipulation, manipulation model, okay? So step number 1 is you need to see a sweep of liquidity, okay? Sweep of liquidity here, which I will explain what this is if you guys don't know yet. Ideally, this is going to be a sweep of external liquidity, okay? External lick or key level, right? So a key level could be, a New York session high, a London session high, a previous day low, that sort of thing, okay? Number 2, we need to see momentum, okay? A momentum shift. So this can either be a bullish or bearish divergence, bullish or bearish momentum overbought or oversold. We need to make sure that momentum is in check as well. And number 3, we need to have an inverse fair value gap for that final entry trigger, okay? This is what actually makes us enter the trade, is that inverse fair value gap after number 1 and 2 are completed. Now, you need to also make sure you have a daily bias in mind. Okay, so what is a daily bias? Well, that is going to be your thesis going into the day, right? Whether you're long or short going into the day. You need context. Every single trade has its own context, but the 3 general rules of the manipulation model are these 3. Okay, so super liquidity, momentum shift, ideally a divergence, right? Ideally ideally a divergence, and that inverse fair value gap for that final entry trigger. So let's take a look at yesterday on NASDAQ, okay? So keep in mind, this is the pre-market, and then this is the market open, right? So what you want to look for, right, when you're trading, in this case, NASDAQ, keep in mind this works across any asset on any time frame. I'll show you guys multiple examples, but this is a really good example of the manipulation model, right? So the first thing I'm gonna do before market even opens is I'm just gonna mark out my key levels. I'm going to mark out my lows here, right? Where are some lows that I want to see swept, right? So, these are the lows. We got some highs up here as well. Okay, and then we have these highs all the way up here. So these are my main pivot points, okay, that I want to see get swept. Okay, so market opens, right? We have that massive dump, right into our level, right? Taking liquidity. And then we immediately inverse with this V-shaped reversal, right? You can also see that the momentum was in that oversold zone as this manipulation move was happening, right? So we sweep this liquidity here, price manipulates down, and then for that entry confirmation, we are waiting for that inverse fair value gap, which occurs right here on this candle. Again, I'm on the 1-minute time frame just to show you how it works, but you could also enter on, a 2-minute time frame, 3-minute time frame. It doesn't really matter here, but your entry is probably somewhere around here. Okay, here is your bearish fair value gap, right? Bearish fair value gap right here. You instantly reverse and close back above that bearish fair value gap, creating an inverse fair value gap. We're also seeing those bullish divergences here forming on the oscillator on the 2-minute time frame. So this is a really good trade right here. You really just want to target the next structure high. So in this case, this was a 1.5 risk to reward ratio. If you're entering on a lower time frame, like a 1-minute time frame, get a slightly better entry, somewhere around here. Stop loss below that bearish fair value gap. Around a 1 to 2. This move right here is called a V-shaped reversal. After this liquidity sweep, you want to see an instant, almost like down and up reversal to the opposite direction. This is an example of a valid trade. You also want to make the trade break even at these previous highs. So as soon as price tags these highs, you'd move your stop loss to break even. But again, you want to target the next structure high as your major take profit. Also, whenever you guys see equal highs where you have one high and then you have a second high that is slightly lower than that first high that did not yet go above that, this is a very strong draw on liquidity, meaning whenever you have a bullish trade idea like we had right here, and we have this equal high to target, it's just another really confident trade. Anytime you see this sort of formation, you can take that trade as well. Now, some of you guys might be asking, why not enter the trade right here, right? Why not get an even better entry as soon as we sweep this low and close back above, right? So we can get an entry something like this, right? This risk to reward is massive. So wait for a swing fail, right? And close back above and enter the trade, right? Oscillator is also oversold. Maybe even wait for the first bullish candle, something like this. You can absolutely take a trade like this, okay? The only issue that I have with not waiting for that inverse fair value gap is that this is not mechanical, right? What is your reasoning for getting in the trade here? Just because you have a bullish candle, like to me, that's not enough. You need to have a very strong, repeatable system. It needs to be as mechanical as possible. That's why I like inverse fair value gaps. It's very mechanical. It makes sense. You're waiting for price to close above that bearish fair value gap. That is something that you can repeatedly do every single time, right? A bullish candle just along after the first bullish candle, this isn't enough confirmation, right? Now, personally, I might take a trade like this just because I have time and experience in the markets. If you are not yet a profitable trader, you really need to make your system as rule-based as possible. That's why I like that inverse fair value gap as that final entry confirmation. And also another reason I like this as my final entry confirmation is because we could technically, do something like this and retest this bearish fair value gap, retest these lows here as resistance and then make a lower low, right? Technically, this is still resistance until proven otherwise. So by waiting for price to actually close above that bearish fair value gap, it shows a shift in order flow, and it's telling you that the likelihood of price going up is going to be much higher than the likelihood of price reversing, especially when you consider this liquidity sweep and this manipulation move with that oscillator oversold. Now, really quick before we jump into some other examples, and I'll show you guys where it doesn't work. If you guys want access to the oscillator at the bottom of my screen here, which I use in confluence with the strategy, make sure to click the first link in the description below. I'm also working on an indicator inside of the pro group for this exact model, for this exact manipulation model. As you can see here, it will actually show you the liquidity sweeps in real time and notify you for when you get that final entry confirmation with that inverse fair value gap. This also has momentum coded into this indicator as well. So you don't even need to have the oscillator pulled up. It will automatically code the momentum. So again, this is a new indicator that I'm working on. It will be inside of the pro group. So that's going to be, again, the first link in the description below. So again, this is a really good trade that a lot of people in my group took on NASDAQ yesterday using this manipulation model strategy. So we saw we had that first trade, okay? Our bias was bullish for the day, but again, that doesn't mean we can't look for short positions. Let me show you guys a few more examples of this manipulation model with the new indicator, okay? Again, we saw we had a sweep of liquidity here into an inverse fair value gap. Same thing down here, right? Sweep of liquidity into an inverse fair value gap. Okay, this would have been a stop out. And this long position here would have been a break-even trade, right? I probably would have put my stop loss below this low, right? Making break even at these highs right here. Now, although this trade was losing and this trade was winning, you would not have taken either of these trades, okay? Even though it technically followed the rules, and that's why the indicator flashed this signal, it didn't sweep a key level. It didn't sweep the external liquidity levels that we had marked out earlier in the video. We have these very clear highs and lows marked out. These are the highs and lows that you want to be taking trades off of. You don't want to be taking trades off of just any random high or low. For example, this is not really a good trade right here. Even though we did have bearish divergences and, maybe if you took a short, it would have worked out. We didn't sweep a key level. So in this case, I wouldn't have taken this trade. This, however, is a trade that I would have taken. And again, this was called on the new indicator here. You can see we had a sweep of liquidity. Again, this is a very key low, a very obvious low. We come down, V-shaped reversal, sweeping this low, immediately closing back above that previous low. And we saw that inverse fair value gap for that final entry confirmation. If you want to take this on a 2-minute time frame, here we see on the 2-minute time frame, we had a sweep of liquidity. Momentum oscillator is oversold, which is again coded into the new indicator. Then we saw that inverse fair value gap on the 2-minute time frame. Stop loss below probably this candle wick right here, targeting again this equal high as our take profit. So do you notice the difference between this move right here and this move right here? On this most recent move, not only did we have a sweep of external liquidity, right? This I would consider as internal liquidity. This is external liquidity. We also had a very clear V-shaped reversal down and up with this very obvious fair value gap, right? This bearish fair value gap up here, this is not a notable bearish fair value gap. This is kind of a small fair value gap. We're not seeing that straight down and straight up move. This isn't a high probability setup. We're not at a key level, but this move where you have this very obvious sharp move down, notable fair value gap, instantly V-shaped reversal with this massive bullish candle, inversing that bearish order flow to the upside. This is the sort of trade that you want to take, right? It's called a V-shaped reversal. And that is the strategy, guys. Sweep of liquidity, momentum oversold, or bullish divergences on your oscillator into an inverse fair value gap for your final entry trigger. That is it for the strategy, guys. It's not rocket science. Again, you can use this on any pair. Let me show you guys Bitcoin. Okay, here it was on Bitcoin yesterday, right? So this was coming into our golden pocket, where we have our golden pocket fib, we have our key level, retesting some highs. Boom. This is the area that I'm waiting to look for long positions. Now I'm waiting for our manipulation model to be our entry trigger. Very strong bearish move down into that very obvious bearish fair value gap. Instantly reverses. This is a perfect manipulation model. Stop loss below that bearish fair value gap, targeting these highs as your take profit for a nice 1-to-3 risk to reward ratio. You're not taking any of these signals, right? You're not seeing that very obvious sharp move down into a key level, right? This is the only key level that you guys should be looking to take a trade off of. That's going to be it for the simple mechanical scalping strategy that you can use across any asset. Again, make sure that you are following my rules. Make sure you're looking for a liquidity sweep of a key level. Make sure you have some other confluences there. Make sure that your daily bias is in check. After you see that sweep, look to have divergences on your momentum oscillator. And for that final entry confirmation, you want to wait for that inverse fair value gap, showing you a shift in order flow from either bearish to bullish if you're looking for a long position, or bullish to bearish if you're looking for a short position. There was a ton of sauce dropped in this video, guys. There's not that many people on YouTube going over a strategy as simple and as effective as this. And guys, don't take my word for it. Backtest this yourself. You don't need my indicators to backtest this, okay? You can backtest this strategy for free on your own. Let me know the results. I've been teaching this strategy in the Discord for coming on 3 years now before I even knew what an inverse fair value gap was. We didn't even call it that. So I know firsthand that this system works, and that's why I've coded this strategy into its own indicator, which we'll be releasing very shortly to my pro members. First link in the description below. That's gonna be it for this video, guys. If you have enjoyed, make sure to leave a like, comment something down in the comment section below, subscribe to the channel for more trading content, and I'll see you guys next video.